But we've demonstrated, unlike I've been told, sub 100,000 ounce production companies cannot make money. We've always made money, and we've reinvested that money to growth. That would take Soma Gold to an extent of close to 100,000 ounce per year, making $100 million EBITDA and $50 million profit at $2,100 gold is our target. So for a $50 million market cap company, it's quite compelling.
Alright, today we're talking with Jean-Francois from Soma Gold, a very interesting gold mining company from Canada with operations in Colombia. Now some rapid fire facts, financials for you at home. During 2023, the company made revenues of more than $81 million, which resulted in an income from their mining operations of $28 million. So $28 million from income from mining operations, and that is compared to a market cap of roughly $50 million. So I think why you can understand that at least demands our attention, especially as all of that was achieved at a gold price trading of roughly $1940 for the average of the year, while the gold price currently is close to $2,400 an ounce, which is more than 25% higher. Jean-Francois, great to have you on the channel. It is a great opportunity together with Lars to pick your brain on the Soma Gold's value proposition.
Pleasure to meet you, gents.
Alright, I would love you to get started with the gold operation that you currently have. You of course have 2 mills operating in Colombia. Perhaps you can give a quick overview. What are we looking at? How many ounces a year? Those type of figures.
Well, we've gave guidance to the market for a neighborhood of 40,000 ounces. We also announced this earlier last quarter. We're changing mining methods, so we're going to mine a bit less tonnage. We're going for lower dilution, raise and stope versus cut and fill, which is more of a bulk mechanized mining. The reasons for that are quite simple. Minimize dilution. We've found that our cost structure was going a bit on the upper trend ending out the year. So we've reviewed the mining methods, the mining plans, make it a short story. We will probably finish the year with the same amount of ounces projected in the guidance, but with less tonnage, but higher grade. So better margin, better cost control. And this is typical of Colombia. The veins are 0.5 meter to 4 meters. When they're 4 meter wide, it's very good for conventional mining. But when it gets narrower, we need to get our crew to more of a traditional mining, what was happening back in Quebec in the 1980s. So with the raise and stope. A lot of people are looking at when El Limon will come online. We're not in a rush because knowing that we're reducing the amount of tons that comes out of the mine, El Limon is not as critical as it was to grow. So we're still growing because we've opened a lot of faces into the last year, going on to this year, into Q4 into Q1. So we'll be able to bring growth, bring scale, benefit from the upper trend gold price, and finish the year with another record year for Soma Gold. So that's maybe resuming what you just outlined in terms of how the growth will be handled. Still the plans to reopen El Limon, but it's going to be towards the back end of the year.
Alright, and perhaps for the viewers at home who aren't as familiar with Soma Gold, you can give a quick overview of El Limon and your other mill that's currently already in operations.
Okay, so Cordero, El Bagre, is operating right now at 450 tons per day in that neighborhood. It is planned over 2028 to scale up to 1,000 ton per day. So a significant scalability onto that mill, and it's fully permitted. All the capex have been spent for the best part of it to be raised to 1,000 ton per day. So the remaining capex to reach that is about $6 million. That would take Soma Gold to an extent of close to 100,000 ounce per year once El Limon and El Bagre are totally ramped up. El Limon has a capacity of 225 tons per day, with the capacity to be increased to 450. So all combined, you have a 1,400 ton per day operation in the scaling up phase by now to 2028.
And is the scale-up of El Limon already taken into the consideration of the capital expenditures needed, so that 6 million figure, or is that excluded?
Yeah, that's a blended total capex. So that's going to come through cash flow, basically. We've proven from 2020 to 2024 that we've scaled from 17,000 ounce a year to grow to 40,000 ounce without raising any capital. We've grown through our own capital generation, right? And that capital generated exploration. So we came from 120,000 ounce resource of now today heading to 500,000 ounce to 600,000 ounce. So we've mined year after year, but each year we've replenished, plus we've increased the resource count. So you can see from 2024 to 2028, the same path of keep increase on the resource count and keep an increase on the production count. All of that is to maintain a fine balance of 10 years of mine life, 8 to 10 year of mine life. So if the resource increase faster, well then we'll put more development and we'll put more production at work earlier. So that could be always compressed. So of course, as a growth company, we want to accelerate that timeline of 2028. If we could do it in 2027 or 2026, and it's not going to be like this. It's going to be scale by scale, right? So every year, Soma shareholder can feel the growth, can see that there's another 5,000 ounce this year, an additional 8,000 ounce, 10,000 ounce, and then to a sum of 100 nearby. So that's the path.
And that number is not dependent on the capital expenditures, like you said, it's only 6 million, but it's more related to the 10-year mine of life that you want to have. So if you increase the resource faster, then you'll also increase the mine life, the throughput.
Totally. It is a function of resource. So we're actively drilling 40,000 meters. Sorry, that's a pretty good budget. We have our own 4 rigs, 2 underground, 2 surface drills, and we're drilling quite different sets of targets. Why? Because there's a lot of prospectivity on that ground. At Cordero, we're using our underground drilling capacity to extend the mine life and extend the resource there, right? So that is 260,000 ounce, and we're projecting in the next 18 months to become 500,000 ounce at Cordero. So a steady growth. And then on Machuca Aurora mine, there's about 128,000 ounce, if my memory is correct. And our goal is to drill and to get it to 250. And then we have our Nietzsche project, which is 25 kilometers north of El Bagre complex. There's 120,000 ounce, and the same thing, we're allocating resources to take it to 250. So if you add up on Cordero, Nietzsche, and Machuca Aurora, that's going to make a sum of 1 million ounce in the next 18-24 months. So as resource increase, and we're targeting to have another 43-101 resource estimate towards year end or Q1 next year. Not so sure about the timeline on this, because we want to make sure that if there's a bit more drilling required, we're going to do it and be included in the report so investors see the growth. Sometimes you're this close to be able to flip resource, but if you're not making the additional drilling, you're just going to miss on it, and it could be a significant amount of ounces just because the drill grid is not perfectly completed. So give a bit of a timeline, year end towards Q1, it should have that 43-101, and we should have another bump in the ounces count.
All right, I think it's a very clear picture with keeping that resource imbalance together with the production profile. Perhaps you can quickly outline what the exploration upside is. You already explained some of it, but I would love for you to include some maps as well to visualize for the viewers at home what are we looking at. And in the past you explained to me that you have these veins running, and there's a couple of opportunities where these veins are actually crossing, and that's some really high prospectus areas for you guys on the exploration side as well, correct?
Here's the section of maybe entering into more geology. And we name it the discovering of the next Segovia mine. Segovia is the next door neighbor. It's over 5 million ounce resource reserve project. Our project El Bagre is right here, and Segovia is right here. It's the next door neighbor to our property. Segovia has been very famous to having cross-cutting veins to the main O2 fault. This is the main fault going northwest to southeast trending, and we have over 100 kilometers of that fault continuous on our property. We're in the same geology, and we've never encountered cross-cutting veins in significance, specifically at Cordero or El Limon or Machuca.
And Segovia is an operational large-scale gold mine in the vicinity, correct?
Yeah, it is correct. It's operated by Iris Metals, Iris Mining. They are close to $1 billion market cap. So our El Bagre operation is into a vertical of less than 250 meters. Segovia is kilometers below Earth, right? So they have a lot more historic exploration on it. As we develop Cordero, we will probably end up being a multi-million ounce over years and over years. What is interesting to be highlighted here is on this map, you can see we are in the same geology in the blue than Segovia, right off the fault. And we own up to here. So we're a very close neighbor, a couple of kilometers below. And what technically here is highlighted is we have the same regional geology, the same structural architecture from Segovia, and the same three phases of the formation have been observed over the mines, right? So it is very promising, and now we're starting to find those cross-cutting veins with our exploration team. We've been very good at working on the desktop, working on the field, and delineating new cross-cutting veins. So that brings a lot more potential to the single vein we were mining in the past. So we'll be communicating those exploration success to the market time to time, and demonstrate that the geology is much bigger and promising than what is outlined in our 500,000 ounce resource currently on the property.
Yeah, and I guess these cross-cutting veins are truly low-hanging fruit. On the one side, the risk of missing is significantly lower than with just following a vein. And the other side is also, once you do hit, you can find these significantly higher purities because you have two veins instead of just one intersecting. Is that correct?
It is correct. In thesis, you need to find those veins, but here is a couple of examples. You can see the drill pattern at Nietzsche here. Really, truly drilled a single structure. But there's a lot of cross-cutting potential here and here, here. So that never been drilled and tested properly. So that's an example, and we're seem to find more and more ore shoot in different contexts of the geology. But exploration is a process. You learn, you understand, and as we've been there for 4 years now, we understand way better what it's all about.
Alright, thank you for that great overview. And of course the plan with exploration is to get that resource up to 1 million ounces, so you can support that 100,000 ounces a year production on the medium term, correct?
Exactly, that's the plan. Making $100 million EBITDA and $50 million profit at $2,100 $1,500 gold is our target. So for a $50 million market cap company, it's quite compelling.
Yeah, it definitely is compelling, a compelling value proposition. Perhaps we can also talk a bit more about production regarding cost. What are you kind of guiding for all-in sustaining cost and cash cost per ounce, which are two very important metrics in the gold mining space to represent that cash-based cost, operational cash flows, and then of course a profitability-based cost. What are you guiding for the next couple of years?
Our 2023 cost, because of the mining method and the dilution, went a bit higher than our own projection. This is why we change and announce. So our guidance is to come back in the $1,300 AISC cost structure and cash cost about $900. Okay, that always been the target for last year. Into the tail end of the year, we had a bit of there's inflation everywhere, so it's not an excuse. We need to work against it. All the miners, all the explorationists, you need to make sure you're going to be under control on that as much as you can. But we're in that cost. It includes all the drilling, it includes all the expansion. So as we grow, and we're not a cash cow at maturity yet, so it's normal that you have some bumps and some stability or instability into the quarters, but that's what growth brings, right? If you look at any technology companies, their cost structure is always close to profitability, break even. Why? Because they're growing and there needs a capital to grow, and that's the fine line without diluting the shareholders. And we haven't done any equity financing since 2020. So that's 4 years without any equity financing and growing the ounce count from 16,000 to this year projected 38,000.
It makes complete sense on the cost side. Thank you for those insights. Another important thing for people to take into account when valuing Soma Gold for themselves is of course your debt position. You've hinted at equity financings. You haven't done those since 2020. That's a good angle. Doesn't have as much dilution as some of the other gold mines, which of course cuts into your returns as an investor. You do have a debt position also with a subordinate note. Can you perhaps tell us about the nature of that debt?
Yeah, well, the global debt is, let's say, rounded up at 24 million. It was a 10-year note. It was done through one of our insiders, one of our director, Glenn Walsh, which at the time for a startup was a lot of risk. So management is highly involved in the financing of that project from the beginning. We own a significant ownership, over 70% of insider ownership as management. So we are really committed. So that note varies at 12% interest. It had a 4-year grace, and principal and interest payments are starting in August 2024. We started to make some payments last year to the debt, and our target is by 2026 to have fully repaid all the long-term debt. It's a long-term debt, so it pays over the next 6 years, starting in August of this year. So it's not a short-term critical balance sheet item. We generate, I believe, 4 to 6 times free cash flow to cover that financial engagement as the short-term liability that generates year after year, right? So as a small-scale miners, I've seen more critical balance sheet than this one.
Yeah, it makes complete sense, and quite interesting to hear that quite a high number of insider ownership of 75%. Could you maybe explain a bit about management? What is the background of the management team? Because I believe you're all experienced mine builders now turning to your own company.
Yeah, between Jeff, our CEO, Jeff Ampson, our CEO, and Glenn Walsh, they've been in the mining and construction business over 30 years. The idea before 2020, when gold equity were depressed, was to find a good asset, build it, operate it diligently, and make sure the costs are under management. as always. And Jeff and Glenn have been the pillars of that operation with our on-ground crew. So that has been the recipe of success for us, and it was the 2020 financing to start El Bagre, and since we've always delivered year after year the plan. So yes, it reflects the 30 years of experience of building and construction and operation and tailing management and moving rocks of the team. I joined it about 2 years ago, my belief is, to push further the message. We had a pretty good 2022 going to 2023 run from 25 cents to about 74 cents. A bit of a bump at the beginning of the year, and then we're on our way back and putting the name out, and we've been very diligent about all the money spent. Last year's financials were outstanding in my opinion.
Yeah, definitely an owner-run company, always a good sign, at least from my perspective. If you're going to invest in a business for the long term, it's good to have those incentives of the management team aligned with your own incentives, and the best way to do that is definitely through a large equity stake. That mine builder history also allows you to have pretty competitive capital expenditure costs for growth, right? We see so many projects where people have to spend $500 million to get to 100,000 ounces, while you guys have taken a completely different path and a significantly lower cost. Perhaps you can explain a bit about how that experience helps here.
Well, I think it was key, and Jeff and Glenn's background track record is do it yourself. Do it not through consultants, do it through your own knowledge. And if you own things, you don't pay a premium for things. So as an example, just for exploration, it's a low-hanging fruit example here. Our total cost, all in assays and for drilling, is about $100 a meter, all in. So compared to most exploration companies I'm overwatching, whatever the jurisdiction is, $300 per meter plus, and some place exceeding $500 a meter. So you can see the torque of owning your own drills, having your own geologic crews, owning your own labs, and having like an handle on your costs translate into more meters for less in the end.
Yeah, great approach to have. Thank you for explaining that. One question about the jurisdiction, because you're in Colombia, and the Fraser Institute recently brought forward their new policy perception index, and Colombia had a quite big drop there on the ranking. Could you maybe explain how Soma Gold is working to mitigate those jurisdictional risks?
Well, risk is for jurisdiction these days is everywhere. Being located in Canada, I see lots of stuff. Whatever the jurisdiction these days, I'd say it's a challenge for everybody. And well, Fraser is a good benchmark for sure, and probably the drop is from, I don't know, I haven't seen the report. You're kind of taking me on the spot here, but maybe my assumption is, well, the new government that took place from a right-wing history of governance going through a left wing, and there was a lot of things out there that they wanted to change, but since that change of government there's been very minimal change. So it's still a very prospective environment to be in. I'd say one of our favorite location in LATAM for business. And every year as a miner, as you increase your operation, you increase your social engagement. So we've won awards towards the community. We are active, as every miner is. It's a standard, right? To be embedded with your community, run programs, school programs, infrastructure program, and so on and so forth. So we're always trying to do more year after year as we grow. And it's not to give all away, it's to be involved. It's not just money, it's to be present. So that's our philosophy, that's how we make things. And if it's for, like, we're not alone in this country, there's much bigger voices like B2 and Zijin and Anglo and other big miners are around. So it's part of the country's important source of revenue. Taxes are 35% blended, so you have a tremendous amount of generation wealth for the country having gold miners there.
Yeah, it makes complete sense. Obviously, risk is always relative, and if you're engaged with the community and with the local government, there's.
I cannot speak for governments because I'm not in, but you know, as a global scheme in the world, when you want to get into power, government makes a lot of promises. Once they get to power, once they get the numbers, the promises changes in more of what was the same from the other government, and then it's the race to stay in power for as much as long as they can. But you cannot fool population as much as you could maybe 20 years ago or 30 years ago. People are much more informed, and they have the power of changing if it's not suiting their economic reality, right? People want to work. People want to have good jobs. And mining offers a platform globally where there's good opportunities for economic growth.
Couldn't agree more. Mining definitely does give good opportunities for economic growth, good jobs, and it can definitely help if you have good governance as a country with royalties and such to help a country grow as well. I guess we have also talked about a lot of the important factors for an investor. We've talked about cost, production profile, where growth can come from, exploration upside. We've also talked about some of the risks. Debt is, of course, an important one. I think you've given some good answers there. Geopolitical risk. I guess a great way to end this overview video of Soma Gold is perhaps catalysts for 2024 and beyond. What are like the big events that investors should be waiting for that could really shake up the markets?
It's a very interesting time for us. I think geologically we understand far better than it was 2-3 years ago. So on the prospectivity of the exploration side, I think investors should be thrilled. They have a profitable vehicle, has a track record of 4 years of delivering strong financial growth, strong ounce count growth production wise, and entering a very interesting time of like switching to 1 million ounce target resource, switching to 100,000 ounce production, which is a threshold that a lot of gold investors are looking for. 1 million ounce resource, 100,000 ounce production profile. But we demonstrate, unlike I've been told, sub 100,000 ounce production companies cannot make money. We've always made money, and we've reinvested that money to growth without equity financings. So the torque on the story is a very committed management, drilling results that will double that ounce count and will double that production in a very short period of time. And who can argue from the last financial $31.8 million of EBITDA with a $50 million market cap story, as let's say approximately, more or less, depending on the trading day. It is a steal, and it's a steal that will keep growing. The torque on the story cannot be better.
All right, very exciting time for Soma Gold. Thank you so much for your time today. Is there anything else you would like to squeak in? Any plugs that you would like to share where people can reach out to you or the corporation? Any last thoughts?
Yeah, well, investors are always welcome to reach for us. At the bottom of our press release, you have our contact details, phone number, email on the presentation as well. So we're always dedicated to articulate the message to the investment community and answer questions.
All right, that's great. I'll also put those contact details in the description so that people can actually reach out. Then thank you so much for your time, and for the viewers at home, thank you so much for watching.